I recently spotted something massive forming in the utility sector. The same cup and handle pattern that led to Nvidia's 200% move and AppLovin's 350% moves is showing up again. And this time it's not just in one stock, but in multiple leaders of this breakout group. When you've been studying charts and institutional patterns like I have for the last half of a decade, you start to recognize the same exact setups that lead to massive moves. I spend a lot of my time analyzing these base patterns and looking for specific formations like multi-month bases on bases. These normally lead to very huge moves for both investors and active swing traders. I look for volume dry-ups at key levels and most importantly, cup and handle patterns in sector leaders. And what is very exciting is that right now I'm seeing a group of utility stocks forming these exact patterns. And remember, when a sector starts moving, the best stock normally will move 60% much better than the laggards. Our job as investors is to find this best stock and heap our money into it. The first one is CEG. This is the weekly chart. We like to look at 2 time frames, never look at 1 time frame. To know that the industry is going up, we just look at the CEG industry. This is independent power. You can see that this industry has been ripping it. The industry is going up. And what happened CEG? Currently from 2023, it has done 330%. Your money would have multiplied times 4. If you put in 10,000, you'd already had 40,000 by now. That's how big these moves can get when you get the correct industry moves. So this particular industry is where it's at, and we're looking at the stocks in an industry and trying to see which is the best, which one can we get into. And CEG is one of them. This one, first of all, is the last in the group. So it's the least recommended that I would buy. Why? Compared to others, it is not showing an easy technical pattern. In CEG, on the daily chart, we see this inverted cup and handle. Okay, so it gaps up. It doesn't cover this gap. That's the first good sign. But I don't like these gap ups and down. That's why I don't like this stock. I don't like stocks that gap up and down like this. They're not nice to hold as an investor. But what we are seeing is a multi-month breakout, which is nice. You see this inverted cup and handle from this consolidation. So we are seeing a base on a base, and it's happening over several weeks. So whenever stocks coil up like this, when they spring out, it's just huge. And what are we seeing on this huge gap up here? It's on very, very huge volume, and it's going to all-time highs. Whenever a stock is going to all-time highs, that's also a very good sign because people are not willing to sell. But yeah, so this is the 4th in the group. I'm going to show you 4 stocks today, and this is ranked number 4.